Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, U.S. Secretary of State Marco Rubio says President Marcos is set to visit the United States in a few days after a 20% tariff was imposed to the Philippines effective August 1st. The Philippine Chamber of Commerce and Industry warns of the significant challenge of higher tariffs on exports to the U.S. The implications with Sergio Ortiz Luis Jr., Honorary Chairman and Treasurer of PCCI. Meantime, despite even higher tariffs, Mega Prime Foods is still going big in the U.S., aiming to secure a foothold in a mainstream market. U.S. Secretary of State Marco Rubio says they are looking forward to hosting President Bongbong Marcos in Washington in a few days. At the 58th ASEAN Foreign Ministers meeting in Kuala Lumpur, Rubio held a trilateral talk with DFA Secretary Maria Teresa Lazaro and Foreign Minister of Japan. He praises Japan and the Philippines for their strong ties with the U.S., ranging from the economic corridor to maritime security to territorial integrity. America's top diplomat said Washington is looking forward to host President Marcos. His statement comes after U.S. President Donald Trump increased tariffs on Philippine goods from 17% in April to 20% effective August 1st. Philippine ambassador to the U.S., Jose Manuel Romualdez, earlier told Reuters the country would appeal Trump's decision. In a briefing at Malacanang yesterday, Special Assistant to the President for Investment and Economic Affairs Frederick Go confirmed that a Philippine delegation would fly to the U.S. next week, but made no mention of the President joining them.
We are concerned that the U.S. has decided to impose a 20% tariff on Philippine exports. So myself, together with DTI Secretary Chris Roque, and Undersecretary Perry Rodolfo and Undersecretary Alan Hepty will be flying to the United States next week. But more importantly than all of this, we remain committed to continuing negotiations with the United States in good faith to pursue a bilateral comprehensive economic agreement, or, if possible, an FTA.
Asked if the Philippines intends to retaliate, Finance Secretary Ralph Recto told Business World no. Trade negotiations are ongoing, he said, and there are no plans to increase tariffs on U.S. imports. Recto added the economy would still grow by 5.5% to 6.5% this year amid higher levies. Meantime, the Chamber of Mines of the Philippines says Trump charging a 50% tariff on imported copper would drive its members to explore other markets. COMP Chairman Michael Toledo told Business World that while copper exports to the U.S. are modest, the move could prompt producers to explore market diversification and product adjustments. Electronic products lead the top 10 Philippine export commodities, accounting for half of the total exports to the U.S. Others include ignition wiring sets, coconut oil, machinery and transport equipment, apparel and clothing, among others. Well, with us now for more is Sergio Ortiz Luis Jr., Philippine Chamber of Commerce and Industry Honorary Chairman and Treasurer, as well as Philippine Exporters Confederation, or PhilExport, President and CEO. So good to see you, Serge. Welcome to the program.
Hi, good morning, Cathy.
Right. So
and good morning, those who are watching us.
Yeah, Secretary of State Marco Rubio said that the President is flying to the U.S. How do you think this will help?
Well, I think we should keep on talking to them, but basically, I don't think we should be offering anything more. We've given everything to them already, but I think we should keep reminding them that where we are and who we are as a partner here in this part of the world. We're the best partner here, and we know very well that most of the negotiations probably are not really based on tariff or trade differentials, but basically, I think, on geopolitics. So I'm not surprised that while our tariff was increased from 17 to 20, that should not be a problem. Unfortunately, they're lowering the others. And I don't know who will be next to be lowered after negotiation to Vietnam, who is now the same as ours.
Right, as you say, it is geopolitics, and we didn't quite expect that 17 to 20%. I mean, you would have expected maybe a lower rate post negotiations. So, from the PCCI's point of view, how should the government negotiate in this round?
Well, basically, I think we have to remember that of the geopolitics. What Trump from the very start has been saying is he will not use uh, sanctions anymore, even for Russia, but he will use tariff. So he weaponized tariff. And what is the intention? To keep the dollar as the trading currency, and that is primordial because he said, if we lose that, then we have lost a war. And basically, also, as being seen openly now, is threatening those who are going to join BRICS. In both cases, we are not looked at as those as one of those who will be abandon the dollar, nor to join the BRICS. But these are leverage that other countries here can use, which I'm not so surprised if Vietnam. On the other hand, also, we know geopolitics is one of the issues. Its relation with China, and we have put bases here, EDCA bases here. We're buying military equipment from them, even fighter planes. We are even planning to put ammunition manufacturing here. Those should those should count. If those are the things that are offered by our neighbors, I think they will have zero tariff. But we have taken for granted because we have given them
Because we are
everything
also
already.
treaty allies, and that could be a leverage, as you say, but then the real casualty surge is really the exporters and the capex, maybe even jobs. I mean, how have you gone on for the last 7 months? Pending the final tariff rate, have your chamber members cut jobs?
Well, not really, because the 17% that was given to us was second to the lowest, and the others were really quite high. Unfortunately, what is being done now is giving exception to products where we might not be competitive and bringing down rates like the one that was done with Vietnam. That is what is worrisome. On the 17%, in April, when it started, we said, let's not worry about them. That would be even be beneficial to us because we are very competitive with our neighbors in the trains. Unfortunately, now we don't know how it will be. But so I guess we just have to keep reminding them we have nothing to offer like our neighbors because our leverages have been already been given offhand.
Let's
And,
build some scenarios, Serge.
therefore,
I mean, you said that at 17%, we've already maxed out what we can give out. So how vulnerable then is the semiconductor and electronics industry? Because this is really the bulk of the exports to the U.S.
correct, but they gave exemption to electronics. So that was okay. Uh, but the effect on the downstream industry and the supply chain is very difficult to establish. But in any case, the situation is so dynamic; it can change every week. You know, so we cannot keep on guessing what will be done. But I hope that we will be successful in the talks to them. But my feeling is we shouldn't be offering any more to them in terms of trade or benefits to the U.S. because I'm not so sure what we still can offer. I think what we can offer probably will affect our agricultural products, which we cannot afford anymore to do.
Also held hostage the supply chains. You've warned of supply chain disruptions when 17% tariffs were first announced. So what impact have you seen so far on the global supply chain during this tariff pause?
So far, none. We are being competitive at the 70% at the rate that they gave the others. But now, I don't know how it will happen, what will happen. No? Even even on the shipping cost, there is a part of so one of the things that was said by President Trump is that they will also uh, impose tariff on on shipping lines or whatever. I'm not so sure of what is at all. That can disrupt again the supply chain.
Looking at the official communication, when you look at the details there, the escalation is really driven in part by the non-tariff barriers imposed by the Philippines. First Metro Securities, we had a chat with them yesterday. It says that the one contributing factor may be that the country's VAT regime currently is the highest in the ASEAN at 12%. And that was recently expanded to cover digital services. Do you think that offering concessions on the non-tariff barriers would be that way forward for our trade negotiators?
I think part of the concession of that tariff barrier will be probably partly also of our inefficiency, no? Because I am not so sure we're really imposing tariff barriers on them consciously. However, it is something that we should look at, no? Because if the non-tariff barrier that they're talking about will be on agricultural product, then I don't think we should offer that because we will have difficulty trying to ward off export of agricultural product from the U.S. to us, and that will kill our agricultural industry.
Another contributing factor, or maybe even detrimental to exporters, the relative strength of the peso. How is that impacting exporters? Because of the dollar's continued weakness, the peso's hovered in the 56 to the dollar range.
Well, of course, it's not good for export, but at the very least, it's market driven, and it depends on our Banco Central what they will do. But definitely, I think one of the things that Trump is also doing to be able to balance their trade is to devalue uh, the dollars, and that is affecting us.
Zooming further out and beyond exporters, the Philippines' economic exposure to the U.S. remains limited. When you talk about the direct and indirect exports to the U.S., they account for less than 5% of nominal GDP. So this economy really is largely domestic driven, and that's really what's kept us afloat. So would any of the chamber's exporters consider pivoting to serve the domestic market instead?
Well, that has been done by certain industries, like for instance, furniture industry. When it was weak in the export, they began to local. Even our garments industry, which before we controlled 40% basically in the U.S. of the children's clothes, even the Ralph Lauren things that is being manufactured, 40% was being done here. We have lost that, and many of them went local. But local market is very limited, and the price is not really as good as export dollar price.
All right, so a lot of uncertainties there, but hopes for the best in the trip of our negotiators next week to the U.S. Sergio Ortiz Luis joining us. Thank you so much for joining us. And Mega Prime Foods President and CEO Michelle Tiu Lim Chan says the tariff hike is not a major burden yet, at least for them. In an interview on Long Conversation, thought leaders, Lim Chan explained that the U.S. exports only account for a small slice of the company's current business. But she admitted that this could change in the coming years as the company aggressively eyes expansion in the U.S. market. For now, Megaprime is focused on navigating the evolving global trade landscape and adjusting its products to match the tastes and the regulations of its target markets from the U.S. to Europe and the Middle East.
Well, as of now, our export target is only around 10% of our domestic. So it's not that big. 3% increase is still tolerable for us because the volume is not that big. But maybe eventually, in the future, when we have bigger volumes in the U.S., we would have to think about ways to make sure that it will not affect us so much.
Catch the full interview on Long Conversation Thought Leaders only here on One News. And you're watching Money Talks. Coming right up, risk appetites are off. Will the buying momentum make a comeback anytime soon? April Lee Tan, a chief equity strategist of Call Financial, joins us live when we come back. And the Philippines' chief economist supports taxing online gambling. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. The Philippines' chief economist supports taxing online gambling, but says more safeguards are needed. DepDev Secretary Arsenio Balisacan says a total ban has not been studied yet, but likens regulation to taxing cigarettes to prevent social harm. Finance Secretary Ralph Rector earlier said the government is proposing an online gaming tax alongside policies like restricting playtime and imposing age restrictions. President Bongbong Marcos has also expressed support for taxing and regulating the industry to mitigate addiction-related harm. Still, Balisacan said present laws might lack the infrastructure to support online gambling taxation. He also said his department has not made a formal position yet on whether a total ban is feasible, with analysts warning this could push operations underground. They instead call for strict regulation, public education, and recovery programs. The Securities and Exchange Commission said the Justice Department has indicted MFT Group of Companies and Foundry Ventures Inc. for violating the Securities Regulation Code. In a statement, the SEC said the case stemmed from the complaint they filed in April of last year. The MFT Group, which later transitioned to Foundry Ventures, enticed investors to join its investment scheme by promising fixed returns. To prove the legitimacy of the scheme, investors were issued post-dated checks under memorandums of agreement, with funds allegedly used for sure projects of the company's subsidiaries. The DOJ also found the group misrepresented its audit financial statements from 2018 to 2021 and sold unregistered securities. Also indicted were Maria Francesca Tan's family members, several officers, the auditing firm Isla Lipana & Co. for alleged aiding and collusion. The SEC issued a cease and desist order against the group in January of last year. Meralco says it may have to buy more power from the wholesale electricity spot market due to delays in securing approvals for its competitive selection processes, or CSPs. Meralco Vice President and Head of Utility Economics Lawrence Fernandez confirmed the Energy Department has yet to issue certificates of compliance for any of its 3 proposed CSPs for 2025. These involve 200 megawatts of renewable baseload, 600 megawatts of baseload, and 450 megawatts of mid-merit supply, part of Meralco's plan to secure over 2,100 megawatts by 2028. Fernandez said the delay holds up the signing and submission of power supply agreements to the Energy Regulatory Commission, forcing Meralco to resort on WESM, which is usually more expensive. The power distributor also warned that delays could impact compliance with renewable portfolio standards. Meralco and Signal, the owner of this channel, are both part of the MVP group. U.S. markets Thursday shrugged off Trump's latest tariff announcements, including his broadsides with Brazil. Both the S&P 500 and the Nasdaq hit new highs, and the S&P rose by over 0.25%. The Nasdaq climbed by about 0.1%. As for the Dow, it rose by 0.4%. NVIDIA has officially become the first public company to be valued at $4 trillion after closing yesterday above $164 per share. The leading manufacturer of AI chips took 3 decades to reach $1 trillion in market valuation, but only 2 years to reach 4. Meanwhile, benchmark 10-year Treasury yield slightly ticked up to 4.347%. And gold prices slightly ticked down to $3,317 per troy ounce. U.S. futures point to a decline when the markets open later tonight Manila time. The Dow and the S&P down by 0.5%, and the Nasdaq slides by 0.6%. Asian markets are edging higher in the first hour of trading this Friday. The Australian ASX 200 up by less than 0.1%. South Korea's Kospi and Japan's Nikkei 225 rise by 0.1% each. And let's take a quick check on our own markets here in the Philippines. PSEI opening this Friday higher by 0.2% at 6,481. The stock market retreated yesterday Thursday by 0.6%, and the broader all shares index fell by 0.1%. Most sectoral counters were in the red except for services and mining and oil. As for the Philippine peso, it is weaker at the get-go. 56.55 to the dollar. The peso strengthened yesterday to 56.47 against the greenback. And the 10-year government bond yields have settled to 6.247% from the previous close of 6.249%. And with us now for more is Chief Equity Strategist of Call Financial, April Lee Tan. So good to see you again. April, welcome back to the program.
Morning, Cathy. Thank you for having me.
Okay, so how are you gauging risk appetite so far? The index was on a march towards 6,600 when 20% tariffs came through, and then came the seesaw moves yesterday, the ups and downs on a Thursday, decidedly ending lower at the close of trade.
Yeah, I think risk appetite is coming back. But if you notice in the market, what's happening is there is a rotation. Certain sectors are not doing well, whereas others are doing better. It depends. Because I think right now, one of the major drivers really is expectations that interest rates would be going down more and faster in the second half, due to, of course, inflation in the Philippines being quite soft. And, I think the Fed, there are indications that the Fed may actually, be cutting rates sooner rather than later, and again, more aggressively. So I think those are the factors in play. So you would notice that more of those interest rate sensitive sectors are doing well right now. And that's helping. I mean, the market is quite cheap right now as well.
Well, where did the tariffs come into play? With tariffs at 20%, that's a lot higher than 17% at the onset in April.
Yeah, I think, I mean, if you look at the tariffs, I know it's bad. But then again, it's not really a big chunk of the GDP. In fact, if you look at listed companies, I don't think many listed companies would be affected by tariffs because we don't have a lot of exporters that are listed. Most of the companies that are listed in the PSE are focused on the domestic market. And again, I mean, if you look at all the other tariffs, 20% is still low at the low end compared to everybody else. It's just that right now you have, for example, Vietnam also being at 20, unlike before, it was so much higher. And the others, I think the gap has narrowed. You have some that are at 25. It's just less. But I don't know what the Trump administration is thinking. It seems like they want to get rid of the 10% tariff and just raise the minimum to 20%.
But even before 20 came through, you've already lowered your PSEI year-end target to 7,700. Are you sticking with that?
Yeah. Yeah, yes, we are. The reason why we reduced it to 7.7 is because we were noticing that, for example, we had a disappointing first quarter GDP growth. So before we came out with the 7.7 target, we were at 8.1, and we were thinking possibly we could see a surprise this year because of the Create More law. Remember, when the Create More law was passed, the government said they were anticipating 4 trillion pesos worth of investments, mostly in renewable energy. But it seems like, they're not panning out, maybe because of uncertainties brought about by the Trump administration, what will happen, or even companies like foreign companies right now encountering challenges locally because their economic outlook is weaker. So in some ways, that is also having some impact on our economic growth, which is why we're thinking, okay, maybe this is not the year for the PSEI to re-rate. So at the 7.776 level, we're just retesting the highs that we did last year. So, that also translates to an EPS growth of 7-8% for the PSEI. So we think that's a safer target. I don't think we'll see a re-rating this year.
Okay, so now you're recommending a buy on dips and sell on strength. So it's basically a stock picker's market from here on out. So which ones do we pick? Which ones do we let go of?
Yeah, so, we're saying since earlier on I talked about interest rates, expected to go down. And another theme is, of course, inflation continuing to go down. So we like consumer names. We also like interest rate sensitive names. For example, among the banks, we prefer the smaller banks. But that said, it's been quite fast. The foreign investors have been selling the big banks and they're starting to look cheap, that I'm tempted already to actually start picking them up, in the buy low, sell high type of trading strategy. And then, of course, we like the REITs. Property names are also going up because they're quite interest rate sensitive. So, a lot of opportunities to buy. And even like those that will benefit from a strong peso, weak dollar, like Cebu Pacific, that's benefiting from lower oil prices, and we have GT Cap as well.
All right, lots to choose from then. Stock Pickers Market, April Litan of Call Financial, thank you for your insights. And before we end this week, here's something you can enjoy over the weekend. The International Silent Film Festival kicks off today. 5 films will be shown until Sunday at Shangri-La Plaza in Mandaluyong. Returning after 3 years, the Asia's first and only silent film festival features a global ensemble of silent films accompanied by original scores by local musicians. Admission is free, and you can check out the International Silent Film Festival's Facebook page and how to pre-register as the seating is limited. It's free and it's good entertainment. That is it for Money Talks. I'm Cathy Yang. Catch us again on Monday at 9:30 a.m. here on One News. Have a great weekend ahead.